Companies today are just waiting for more QE, more free money, more tax loopholes, so the gigantic behemoths can continue to grow. But look back into the pages of history and you will see the Apple and Amazons of today are nothing compared to the biggest companies ever. You came here for the truth, so let me unveil that for you. I want to talk about this issue and so much more. Let's begin. What you are looking at is the Dutch East India Company back in 1637, right at the peak. Compare that to 20 modern companies: Apple, Alphabet, Microsoft, Amazon, Facebook, and more. They valued at $7.9 trillion. Compare that to an inflation-adjusted $7.9 trillion for one company. And the only reason I wanted to talk about this was just to picture for yourself the size of this company. It's absolutely massive. Thinking about it, you look at a company like Apple or Amazon, and they're huge by today's standards. But imagine 7.9 trillion inflation adjusted for just one company. Now, I'll show you a few more examples of huge companies. This year, Saudi Aramco, valued at an estimated $4.1 trillion. Apparently, it might IPO in 2018, we'll see. But that is unbelievably massive, to say the least, for one company that exists today. PetroChina apparently surpassed $1 trillion market cap in 2007. Adjusted for inflation, that's $1.4 trillion today. Big numbers. So the reason I mentioned this was just to sort of wrap your mind around how much money this one single company has. All right, moving on. Right now, stocks are so overbought. Equities right here, the S&P 500 Relative Strength Index. It's going back into that surge leading up into the dot-com boom and bust. Massive. I mean, I've been covering this for a long time, showing you various charts. This is just yet another indicator. All right, Japan. I've said it many times before, but there are almost every single person I've talked to in the financial industry will tell you that quantitative easing works. Just look at Japan. And this is a meme. This is just this thing that I just keep hearing, and it's frustrating. It really is, because it's not true. It really isn't true. You can't devalue your way out of a problem. It just doesn't make sense. Too much debt? Okay, let's get into more debt. It's never worked. Never in history. Japan's central bank owned 74% of the nation's ETF market as of October. Look at what it has done. Back in 2010, the Bank of Japan said, we will do whatever it takes. We're going to start buying up all of the ETFs. Of course, they were buying up everything else anyway, but ETFs are becoming a much larger percentage of the total. And look at what it has done. Consistently increasing its positions to keep everything afloat. I've shown you this chart before. Essentially, what we're looking at is closing in on becoming the only buyer of ETFs, the only buyer of all this garbage that they hold. 3/4 of all of it is owned by the Bank of Japan. Printed money out of thin air. Look at this. Financial crisis hits, and ever since, the Japanese stock market has risen. But not without consequence. The BOJ triples ETF purchases. BOJ doubles ETF purchases. Every time there's a little problem, they just print more money. And it's so unbelievably ridiculous to hear people that are supposedly educated, that are supposedly intelligent, and people give their money to them, their hard-earned savings, they give it to them hoping that they will take care of it. And time again, they're burned. Well, there's not much else I can do. These people just have to get burned every so many years. National debt as a fraction of GDP. According to the CBO, they're projecting massive increases on the national debt. I do believe that will happen regardless. I mean, there's no way that they can get out of this mess, and every policy that they put in place only makes things worse. You're never going to get out of it because you can't. You can't reduce the debt. It doesn't work like that. Maybe for temporary periods of time, but it has to come back around. The entire system is built around this notion that debt must consistently increase or it collapses. Now, Poland, very quickly, risks being the EU's rogue state. So they're playing a game of tug of war, and they're fighting in between the EU and Poland. There's a little bit of turmoil that's existent right now. The problem that they have is that they're fighting with this supranational entity that exists on top of it. It's a big problem. The underlying system is the problem. One currency, one interest rate. You have the central bank controlling financially what happens. You have, the EU sitting on top of them deciding what they will be able to do in everything, all these different political measures. They have to cut back on this, they have to increase to this, you have to follow this ratio, you have to follow that ratio. It doesn't work. Maybe it works for Germany, maybe, but it doesn't work for all of the countries in the bloc. It just doesn't. Some benefit, some lose. It's not an even playing field. And yet, they still try to push this EU business. It's just ridiculous. Really, truly. Big, big mistake. All right, now, the economy can get better if there are more jobs being created. Unfortunately, that's just not the case. We look at the massive amounts of temporary jobs that are always coming out seemingly every single month. And you total up all these jobs, it wouldn't surprise me if we had billions of people working in the US. But wait a minute. That doesn't make any sense. Well, that's the job numbers for you. Amazon estimates, of course, Amazon added 75,000 new robots to their workforce in 2017. That's a total of roughly 100,000. By these approximations, machines constitute 20% of all Amazon, quote, employees. That's just strange to think of. Now, Amazon has been hiring employees, human employees. And it's just, of course, they've been doing both, okay? But when we look at it as a total, right? Amazon has been putting a lot of businesses, unfortunately, a lot of companies out of business. And it's been the case for a few years. But, and when you look at the total number of jobs, there isn't enough being created by Amazon to fulfill the needs of all the other people that have lost their job. So that's the way you got to look at it. Look at the total number. Too many people have lost their jobs, department stores and what have you. And obviously Amazon's not going to be able to hire all of them. They have corporate profits to worry about. So that's just the way it is. Look at this. If you want to read one good article today, this is the one. I can't read it for you, unfortunately, due to the content within it, but I highly recommend to read it. I don't tell you to read something in this way unless I thought it would be very beneficial. I mean, if you read the title, you'll get the gist of it, but definitely read this one. Okay, that's all. If you found this video informative, please give me a thumbs up. Last but not least, if you found this video informative, I know you will find my books, The Money GPS and my newer release, Global Economic Collapse, more informative. You can actually flip through these books. If you go over to Amazon, they have a look inside feature. It's going to allow you to flip through the pages of these books to see if you like them. Take care. Once again, I just want to extend my thanks and gratitude to everyone for everything I'm seeing recently, whether that is the thumbs up, the comments, the subscriptions to the channel. Thank you. I want to extend my gratitude to all those who have donated to me through all the different cryptocurrencies, through PayPal and Patreon, of course. I'm just really very grateful. Thank you all.